Through, let's kick off with the first one. Data released over the European session had some China house price index numbers for September and China PMI number. In France, we had the market PMI, Germany, the PMI, and the Eurozone market PMI as well. I've got to say, everything broadly in line. I would say there's nothing particularly outstanding.
But you can see why the Chinese lowered their rates. House price index looking rather sickly, and the Caixin PMI as well. That's 47. 47 is below 50, which is in contraction, which is quite an achievement when you've got nearly 7% GDP growth. But there we are.
Understood. In terms of data points to look ahead to next week, Zach, we've got the German IFO business climate on Monday, Eurozone private loans and M3 money supply on Tuesday, French consumer confidence on Wednesday, and Spanish retail sales. Again, not big headlines. I think the fact that the market has absorbed the latest China GDP number, we've had the non-farm payrolls out the way. Is there anything in the back of your mind that might sort of move the markets, or do you think it's just a sort of the start of the Christmas rally?
I think it looks a bit like that. I suppose the only thing which is left are the remainder of the US Q3 reporting season. But you've had one or two. I think IBM was rather sickly, but in general, it's you sort of remember the good ones, and also the bar was so low. It's not really affecting the market. Plus, if interest rates, if it is bad news on the earnings season, it means that interest rates are even less likely to go up.
Yeah, so bad is
good. So looks quite clear now.